Congress considers another stimulus bill, many say instead of putting the country further into debt, the solution is to reopen the economy and get Americans back to work. I do now want to bring in the founder of Markowski Investments and host of the national radio program Watchdog on Wall Street, Chris Markowski, to talk more about reopening the U.S. economy. Hi, Chris. Thanks so much for joining us today.
Not a problem. Good afternoon.
As I mentioned, all 50 states across the U.S. are now in some phase of reopening their economies. Wall Street liking that today, but the pace of that reopening does vary widely state to state across the country. At what point does it hurt Americans who want to get back to work more than it saves people from the virus itself?
This is the balancing act that always needs to go on, what public policy officials have to do. Obviously, let's say we take a look at it if we're looking at a speed limit on a highway somewhere. Obviously, if we lower the speed limit to 20 miles an hour, there's going to be less death on the highway. That's obvious, but they're not going to lower the speed limit to 20 miles an hour on a highway. That's just not feasible. It's not going to work well for the economy. The same, even it sounds kind of morbid, but the same type of things need to be taken into consideration by our public officials, because along with the fact that people are dying, and this is a bad virus, and there's no doubt about it, we know who it strikes, we know who it can protect, but people also die when you have unemployment and massive amounts of unemployment and deaths out of despair. This has happened in the past, study after study after study, and we need to balance this right now. I think that the stock market and the way it's reacted over this past week is kind of fueled by some of this hope that more of the country is going to open up.
The CARES Act, passed by Congress, approved by the president, did expand unemployment benefits, adding $600 of federal unemployment benefits on top of whatever someone qualifies for from their state. Democrats are now pushing for that expanded unemployment to be extended until the end of the year. Republicans and many business owners, though, have raised concerns about that, saying it incentivizes employees to stay at home even when their job reopens. Treasury Secretary, though, confirming on Tuesday employees who refuse to return to work will not be eligible for unemployment benefits any longer. How can that help to protect the U.S. economy and small businesses across the country?
This is incredibly important. When this was one of the big debates in regards to the CARES Act, the fact that people are going to be making more not working rather than going back to work. I don't know. I heard Steve Mnuchin talk about this yesterday. I don't know how he's going to go about accounting for this or what type of directive he's going to put out to make this work. But it is a necessity. I've spoken with plenty of small business owners all over the country that are saying the same thing. They say, how am I going to bring these workers back? I don't have the revenues to give them the type of raises and actually match what the government is paying at this point in time. I'm actually encouraging a lot of college grads that are not ready to go back to work yet, their jobs maybe on hold before things open up, to go and take some of these jobs. I think it will show a little bit of initiative.
Concerns are also now being raised about a long-term shift to working from home in the U.S. economy. Talk about New York City, for example. It's full of massive office buildings, usually brimming with employees there. Several businesses, though, are now looking at working from home as a way to cut costs for themselves and then also protect employees, not having to pay, the kind of rent for those buildings there in New York City. Those decisions, though, have a trickle-down effect on the local economy in those areas. Restaurants, for example, that were specifically built in those areas for people on their lunch breaks. They're concerned about losing business. What kind of shift are you expecting as we do emerge from this pandemic?
I think it's going to be massive. It's a great question and a great point that you raise. We're already seeing real estate markets in and around the suburbs in the city are booming during this shutdown. People want out. We're seeing school enrollment way out east on Long Island starting to go up, but people are saying, we're just going to stay out here. Businesses are going to start hiring all over the country and saying, hey, you know what? You can work from Nashville, you can work from Florida, you can work from Texas in these low tax states, and the cost of employing someone is going to be lower because the cost of living is lower. Without a doubt, this is going to hurt commercial real estate in Manhattan. Whether or not they're going to be able to rezone a lot of that space and turn it into residential, I don't know. What I do know is that apartments in my old neighborhood on the Upper East Side of Manhattan are less expensive than where I live on Long Island right now, which is a bit of topsy-turvy to what would be normal.
All right, Chris Markowski, the founder of Markowski Investments and host of the national radio program Watchdog on Wall Street, joining us to discuss the economy amid the coronavirus pandemic. Thanks so much for coming on the show today, Chris.
Thank you so much.